You may have heard the term that investing is 10% buying, 10% selling, and 80% waiting. And effectively what this is referring to is the concept of patience. And today I'm going to deep dive and show you some examples of why patience is critical to your success if you are a long-term investor. How's it going, guys? Ryan here. Welcome back to the channel for another investing video, and today, as I mentioned, we are talking about the concept of patience and how it is integral to your success as a long-term investor. It is effectively one of the most important concepts that you need to learn, and often it takes experience as opposed to the theoretical side to get your head around it. But before we deep dive into that, guys, please remember to like this video as it helps me out with the algorithm a lot, and subscribe for more investing, stock market and wealth management content on this channel, all that sort of cool stuff. And I'd love to know down in the comments section below when we get to the end of the video what your thoughts are and your experiences are with patience when it comes to investing in the stock market. So guys, without further ado, let's get into the video. And briefly, before I show you some examples of some stocks where patience has really paid off, I want to share with you my experience. And what I found was, as a new investor, patience is something that I genuinely just did not have. I would get frantic every time the stock prices fluctuated, whether it be up or down. You'd have that absolute adrenaline rush if a stock went up, 10-20%, and you would have the polar opposite if it dropped by the same amount. But one thing I learned is that reacting to these situations is not going to help you in the long run. Yes, it may help you in some circumstances, whether it be if you're cutting your losses quickly when trading, or you just want to make some real quick profits. But if you are a long-term investor, patience is going to be absolutely critical to your success. And what I'm going to share with you today is some examples of some very well-known companies, both Australian companies and international companies, where patience has clearly been the key to success. And not only that, it hasn't been smooth sailing for all these stocks, but the point they're at now is effectively, for the majority of them, the best point they have ever been in with regards to their stock price. So let's deep dive into my computer, guys, and I'll see you back there. Welcome into my computer, guys, and I've effectively brought up, as you can see at the top of the screen, a bunch of different stocks which are very well known and show the concept of being patient pays off. And what we're going to see is a consistent trend throughout these shares, in the sense that they all started off small, they all incurred price fluctuations throughout their entire journey as a company, but they are now at peak times with regards to their stock price and their market caps. So the first one off the rank is Northern Star, and Northern Star, also known as NST on the Australian Stock Exchange, is a gold company. And effectively what has occurred is, as you can see, you got your daily chart, price fluctuations as you'd expect. But let's increase a bit. Alright, 5-day chart. You've got your price fluctuations. That's absolutely fine. But as we start going along, you're going to see a typical trend occur. You're going to have your ups, you're going to have your downs, but long term, they have been presenting effectively very well. So 6 months still not looking that crash hot. Let's go to a year. Alright, we're back in the green now. Now let's expand that to a 5-year scope, keeping in mind this company is relatively stable, so the price action that's currently going on now is not reflective of the point we're trying to make here. 5 years, you will see the point we're trying to make here. As you can see, back at the start, we're talking $2.78 Australian per share. And you can see a consistent climb. But within this climb, there is significant ups and downs. And you might want to try trade this, but overall, it's going to be effectively extremely hard to do so. But also, you're going to potentially miss out on opportune gains. And what you can see is, if you had just left this stock, it would have consistently grown. And you can see it's a bit more volatile these days, but on a relative scale, it has calmed down quite a bit in the last year or so. If we increase that to the max, we can see if you got in back in 2010, you could have got in so cheap. We're talking like 3 cents, 2 cents, 4 cents. That is the sort of prices you can get into stocks early. If you have the patience to wait 10 years or so, look at how much these stocks can increase. That is thousands of percent gains. And not only that, you get in early, you accumulate a lot of shares, and companies such as this, as you can see, start paying dividends. Now that is absolutely phenomenal in my opinion. Let's move on to our next example. MinRes. So this is a lithium company, and as you can see, we're going to see a similar sort of trend occurring. We've got the 1 day, then the 5 day. And the 5 day, yeah, cool, we're going up. 1 month, you can see we've got fluctuations. It's occurring. The 6 month, fluctuations, but it is a relatively green trend. Even in that space of time, we can see it's gone from $20 Australian all the way up to, at its peak, only recently, $35 Australian. That is phenomenal in itself, but let's keep looking at it. 1 year chart. Wow, it's grown even more. As you can see, it was down at the 12s and the 13s back in March of 2020. Now let's expand that even further. 5 years. Wow, we go all the way back to 2015. And you can see this stock is only worth $4. It's now worth $34, as you can see, guys. And that is really a testament to patience. And we're not talking a 10-year period now. We're talking a 5-year period to see those sort of gains. But once again, let's go to the max. How early can you get in? Wow, that is phenomenal. And we're talking mid-2000s. Fair enough. But as you can see, lots has occurred, and this is a bit more of an extended chart so we can see exactly what's going on. You can see that the price was relatively low, $1. This goes, then you have the GFC, bang, that falls. But overall, it's had huge fluctuations. But if you've invested in a company with those solid fundamentals, it will continue to rise over a long period of time. The trick here is not to necessarily time the market. The trick here is to buy and accumulate over time. Now let's look at the last ASX stock here, Fortescue Metals Group, and you'll note a trend here. These are all mineral stocks, but we're going to change from that very shortly. So Fortescue Metals, iron ore company, and you're going to see the exact same trend occur. The 1 day, yep, we're down, fair enough. 5 day, okay, we're seeing a little bit of growth. It's actually quite significant growth for a 5 day on a company of this scale. 1 month, wow, that is insane. In a month, they've gone from $17 to up here a peak of 24. Incredible. 6 months, wow, $14 it was. 14, it even got down to 13. This is within the past year, guys. If we expand it even more to 1 year, wow, we're talking low. We're talking $10. We're talking less than $10, guys. Look what patience is doing here. This is a company with solid fundamentals, an industry where the resource is in demand. They have a commercially viable product, good grades, good management, low expenditure from a CapEx and OpEx perspective, as they are making a good, healthy profit and margins. And as you can see, look at the dividend yield, guys. Wow, 7.5. Incredible. 5 year chart. Wow. You could have got in 2015 at $1.87. That is insane, considering that we're now up here at $23. Once again, go to the max. Oh, this is probably not the best example. 5 years, we'll leave it at that. I suppose that really shows you an example. But let's move on to some global companies which do the exact same thing. And you're going to see these are actually a lot crazier than the past three we've already seen. Apple, 1 day, 5 day, 1 month, all up, all green. 6 month, you can see there's been a climb. We're green since the start of the 6 month period, but there has been fluctuations. There's been ups, there's been downs. There has been points where you could buy in, you could sell out, you could do a little bit of flip and make a profit, but is it really worth it? Let's look at the 1 year. Whoa, we're still going up. Absolutely incredible. A dip down here in the 50s. In the 50s, guys. And yet we're all the way up here now in the hundreds. In the hundreds. We've over doubled. And this is a company of immense scale compared to the others we've just seen. 5-year chart. Whoa. That is really phenomenal, guys. $28. And we're moving through and we go to $128. 5 times, guys. It is effectively 5 times in value. Let's go to the max. Whoa, that is a chart. That is a phenomenal chart. You're talking literally back in the day cents to get into Apple. This is a tech company, guys, one of the biggest tech companies in the world. And if you had the patience when you bought this early on, and yes, we're talking decades obviously here, but if you had the patience to get in, sit and hold your shares, you would be making a lot of money. Even if you were getting in at these points across the years, you can see all the shareholders have accumulated and they've been getting dividends as well, which is great. But look at the growth of this, guys. Let's look at a similar company, a software company, Microsoft Corp. Same thing, we're going to see exactly the same thing. 1 day, 5 day, 1 month, 6 month. You can see it's been choppy here. There's ups, there's downs, there's ups, there's downs. Now, here's where it gets interesting. Once again, guys, we go to the 1 year. Okay, now we're seeing the growth. It's a long-term trend. We're seeing growth over an extended period of time, but we are still seeing growth. 5 years. Oh, that shows us exactly what patience can do. You can see there's been ups, there's been significant dips, great buying opportunities. But here's the thing. Do you really want to risk selling your shares and missing out on potential growth? If you're just simply investing and accumulating those shares, you don't have to sit there and monitor it. You can watch it go up. So even 5 years ago, oh my God, look at the price, guys. Look at the price, $55. And now we're talking over $200, guys. Over $200. Look at the max. It's going to be the same as Apple. Wow. And even as you see, here's a peak here. Bang. That's fantastic. And it went down. But look, patience paid off. And this is a company that once again pays dividends. So even though it's not doing too much, there is dividend yield there, guys. You're still getting money out of it. But look at that. That is parabolic, guys. Similar to Apple. And here's the creme de la creme of stocks everyone's talking about, and probably the most insane one. Tesla. Elon Musk. He's done a fantastic job at absolutely outperforming the rest of the stock market and probably any stock in the entire world. He has done a fantastic effort. Let's look at this one, guys. 1 day. Okay, yeah, we're going down. Fair enough. 5-day chart. Okay, we've got some growth. Look at the fluctuation. We're talking, it started the day at 643, it went down to 613, and it peaked at 675. That is so much money. Imagine if you got in there at a point where it was worth a few dollars or a few cents or whatever. That is crazy. 1 month, we see the trend starting. 6 months, oh yeah, consistent growth trend. Fluctuations up and down once again, but patience, guys. That's what we're talking about. Be patient with your investments. 1 year, beautiful chart. Look at that. Look at the change in value there, $83, and now we're talking $649, guys. That is absolutely phenomenal. 5-year chart. That's crazy. Absolutely crazy. But even so, look at this period right here. It's very extended, and we're talking, it's hovered around, the 30s, the 40s, that sort of thing. But look at the max. If you got in back here, it's grown. Patience. Patience pays off. But the one thing to remember, you have to invest in companies with those solid fundamentals. You need to make sure they have a globally significant product. It has to be a low capex, low opex, retrospectively to other industries. You want to make sure they don't have debt. You want to make sure they've got cash on hand. They can actually do stuff. They're actually able to make money, make an impact, provide value for their shareholders. This is crucial, but you can see how this has paid off. We're literally talking back in the day, $3, $4, a share, and now we're talking $649. That is just, in my opinion, absolutely mind-blowing, and it really shows, all these examples show the importance of being patient when investing. I hope you enjoyed today's video, guys, and really did find some value from it and understand the importance of being patient over a longer period of time. As you would have clearly seen, being patient through all the fluctuations of stocks which have solid fundamentals long term and are consistently growing is the key to success. Whilst yes, you could trade these stocks on their peaks and their troughs, it is incredibly hard and stressful to do so. In fact, the best move you could do is sit and wait and accumulate shares over the long period of time as opposed to trading the ups and downs. It's a lot less stressful and it's a lot simpler than having to sit in front of a computer monitoring every single move of that stock, and you still see the rewards at the end of it. If you did enjoy the video, please remember to give me a thumbs up. It helps me out so much. And as I said before, guys, let me know your thoughts on patience and your experiences with patience and how they have, whether it been paid off or you weren't patient enough and it has turned into a bad situation for you. Let me know in the comments section below. And if you haven't done so already, please subscribe to the channel for more content like this. And with that, guys, I hope you have an awesome day. See you next time. Cheers.